The Accumulation Distribution Line, or ADL, for short, is one of the best indicators to use when you want to know whether investors are buying or selling security you are interested in. It's a simple yet powerful indicator that can show you at a glance whether the price for security has potential to move up or down in the near future and if your investment decision is valid or not. This guide will explain everything about ADLs, including what they are, why they are useful, how to interpret them, and much more. Developed by Mark Chaikin, the Accumulation Distribution Line is a volume-based indicator designed to measure the cumulative flow of money into and out of a security. Volume-based indicators like ADL measure how much buying or selling pressure that took place during a particular time frame. ADL can be calculated in 3 steps. First, calculate the money flow multiplier. Second, the money flow multiplier is multiplied by volume, we get the money flow volume. To get the Accumulation Distribution Line, ADL, we add these volumes together. The money flow multiplier fluctuates between +1 and -1. Thus, it holds the key to the money flow volume and accumulation distribution line. The multiplier is positive if the closing price is in the upper half of the high-low range and negative if it is in the lower half. This makes sense because when the price closes in the upper half of the range, there will be more buying pressure than selling pressure, and vice versa. The accumulation distribution line rises when the multiplier is positive and falls when the multiplier is negative. Accumulation distribution line measures money flow over time, multiplied by volume. High multiplier and high volume indicate strong buying pressure, which propels the indicator higher. Low negative numbers with high volume indicate heavy selling pressure. An uptrend in prices with a downtrend in the accumulation distribution line suggests underlying selling pressure which will lead to a bearish reversal of the security. On the other hand, a downtrend in prices with an uptrend in the accumulation distribution line indicate underlying buying pressure. Trend confirmation is a pretty straightforward concept. The oscillator's peaks represent periods of increased buying pressure while its troughs represent periods of increased selling pressure. A downtrend in the accumulation distribution line oscillator's trough lower than the previous trough. Likewise, an uptrend in the accumulation distribution line is shown by each oscillator's peak higher than the previous peak. A bullish divergence forms when price moves to new lows, but the accumulation distribution line does not confirm these lows and moves higher. The result is a strong indication that buyers are accumulating shares while sellers are losing interest. On the other hand, a bearish divergence forms when price reaches new highs, but the accumulation distribution line does not reach these highs and instead drops lower. The result is a strong indication that sellers are accumulating shares while buyers lose interest. Pros of using accumulation distribution line. Using this indicator is relatively easy. It's a good way to determine where the divergence is likely to take place. The AD indicator is present in most platforms such as TradingView, MT4, and MT5. Limitations of using accumulation distribution line. The AD indicator doesn't factor in prices changes from one period to the next, only highlighting the final price within the current period's range. This creates some inconsistencies. When a stock gaps down 25% on huge volume and the price oscillates throughout the day and still end in the upper part of its range, but down 21% from the prior close. Such a move would actually lead to an increase in AD even though the stock dropped in value significantly. Indicator divergences can last for a long time and are poor timing signals. When divergence appears between the indicator and price, it doesn't necessarily mean a reversal is imminent. There may be a long wait for price to reverse, or the price may not reverse at all. How to trade using accumulation distribution line for greater profitability. ADL is a volume-based indicator which shows divergences. So in order to open the position based on using accumulation distribution line, we will look for bullish or bearish divergences. Go long when there is bullish divergence and short when there is bearish divergence. If you have other queries regarding the usage of accumulation distribution line indicator, do comment below. Don't forget to like and subscribe our channel.